Hi, welcome to Mondays with Marcia. I'm Marcia Judkins, a former member of the Utah House of Representatives, and I'm here to talk Utah politics with you. So I was thinking about property taxes, which is today's topic, by the way. I realized that there was too much important, if not necessarily interesting, information for just one episode. So this is part one, and I'll be covering who pays who and how much. Next time, I'll explain rates, truth in taxation, and why your tax bill may be going up every year, even when tax rates go down or stay the same. So property tax in Utah is a local tax that property owners pay based on the value of their property. And renters also pay property tax through their rent. It's one of the three major revenue sources for government in Utah, along with sales and income tax. And property tax in Utah is entirely local. It's collected and administered at the county level. Each county assessor determines property values, and each county treasurer collects the tax. And in Utah, a large portion of our property taxes go to public schools, and the rest goes to fund cities, counties, and special service districts and projects. The state does set up rules and frameworks, but it does not receive any of the revenue from property taxes. So let's talk about exemptions. By law, Utah homeowners receive a 45% exemption on the market value of their primary residence, meaning you're only taxed on 55% of your primary home's value. For example, if your home is worth $500,000, you're taxed on just $275,000, which is 55% of that total value. However, second homes and investment properties are taxed at the full market value. For low-income seniors and disabled individuals, there is a circuit breaker program, which isn't an exemption, but it provides a tax reduction or refund based on income. And there's also some military and veteran exemptions and some for agricultural land. In addition, nonprofits, including churches, governments, and some hospitals, are also tax exempt. These exemptions cause some disparities in city and school district funding. For example, in Park City, which has a majority of second homes and investment properties, property taxes make up almost 30% of the city's revenues. And in contrast, property taxes only make up about 7% of the revenue in my city of Provo. So how does this process work? Well, each year the county assessor estimates the fair market value of your property, which is the price a willing buyer would pay and a willing seller would accept in an open market. And depending on your property type and the available data, the assessor uses one of three methods to find your home's value. One, the assessor looks at recent sales of comparable homes and then adjusts for differences. So for instance, if a similar home on your street sold for $600,000, but yours is smaller or needs updating, your home might be valued at $550,000. Second, if you have a new or unique home that doesn't have any comparables, the assessor estimates the cost to rebuild the home and then adds land value. So if rebuilding would cost $300,000 and the land is worth $100,000, the fair market value would be $400,000. For business properties, the assessor bases the value on net income. For example, a duplex earning $34,000 per year with $4,000 in expenses might be valued based on $30,000 of net income. Sorry about the math. I love math. But anyway, if you believe your assessed value is too high, you can appeal to the County Board of Equalization. And I was surprised to see that in Utah County, about 70% of appeals are successful, at least according to their website. So it's worth trying if you think that your home's been overvalued. Well, that was a lot, so I'm going to save the rest for next time. And thank you for listening, and let me know if you have any questions or issues you would like me to explore. I'll see you next week.